everybody. My name is Brian Noble. I'm calling to you from Dublin in Ireland. It is 9:15 a.m. and I write an economic commentary on the markets, which I've done for the last 8 years. I primarily concentrate on 10 contracts, of which the S&P is probably my favorite market because there's a lot of gap plays to play on a daily basis. And it's one market that you can sit in front of the screen and catch it, and then you can go away and do your other stuff and then come back for the important hours. It's a very technical market, and the gap play is amazing. And how the gap play works is when the S&P closes in Chicago, like it did last night at 9:15 p.m. till the opening this afternoon at 2:30 p.m. London time, whatever difference there is in the price between the close and the open is called a gap, and invariably all these gaps get closed. It might take a day, it might take 2 days, it might take a few months, but if you go back to all the madness that happened in February and March, all these gaps have practically been filled with this up move after the Fed came in and supported the markets at the low on the 23rd of March. The S&P, I'm actually quite bearish of the market, but given the fact that the Fed have put so much stimulus into it, it's so hard to be short. And if you are short the market, you've got to be very quick to take your profit, because it just comes back in your face, as we saw again yesterday when after the coronavirus cases increased in both in the States, Germany and in China. We saw a big sell-off in the market early yesterday morning, but once we woke up in Dublin again, all those losses have been reversed, and the market continued higher overnight. And as you can see on the S&P chart here, as long as the 200-day moving average, which is the key, at 30.20 holds, this market is going to be a buy on dips. And we really need to break below 30.20 for the 200-day moving average, and then 29.50 for the 50-day moving average for the market to get back into a downtrend. Now, if you go back through history of the S&P, there are three phases to the stock market. If you go back to the crashes of 1929, 2000 and 2008, there was three phases. The first phase is the big sell-off that we saw back down to here when the market went, in 5 weeks we saw 1,000 point fall in the S&P. Then we get phase two, which is this, which can be very sketchy. It can be kind of a V, which we had to here. Then it kind of trade sideways, and then we get another V, and then we spiked at 32.20 there last Wednesday week before the Dow fell 2,000 points the next day, an incredible move. But of course, the Fed can't allow this to happen, and they came in down saying they were going to buy bonds, corporate bonds, and they were going to do another stimulus. Trump came out last night and said he's going to give more checks to the households, and hence we have the market rallying again today, despite Navarro's comments overnight to say that the Chinese deal was over, the trade deal, and the S&P having got down to a low of 30.60 overnight, is back trading at 31.30 today in the September contract. So it's extremely difficult to be short. You've got to be a buyer on dips, but against that, as you can see here at the top of the chart, we had which is very, very rare, is an island reversal. So the market had gapped up here, traded for 4 or 5 days around this area, and then we gapped lower, which we did on that Thursday morning, and then we sold off. So unless the S&P can get back above 3,200, the market is a sell into this item reversal. So today my sell level is from 30 to 31.67 stop. This is the September contract. If I'm taking short, I'll have a take profit at 31.30. On the buy side, given the rally that we had, this 200-day moving average, every time we sort of test this band, the first time you always get a huge rally, second time not as much, which we saw yesterday, and probably the third or the fourth attempt we'll eventually break this move. But today my buy level in the S&P is from 13.80 to 13.95 with a 30.67 stop. If I'm taking long, I'll have a take profit at 31.10. So I just want to continue the theme of the island reversal. I'll just go in and show you the Dow. Again, you can see the island reversal there from 2 weeks ago when we got up to a high of 27,500. We gapped up, traded sideways at this, and then we broke down again when we had that 2,000 point sell off. If Trump has any chance of winning the election this year, he needs the stock market to hold in. He cannot afford this market to sell off again. I think there's absolutely no chance of a V-shaped recovery. But when you have the Fed, who are now the largest hedge fund manager in the world, buying everything that they can, and if the stock market does fall down in a phase 3 that we've had in the previous history repeats itself, they'll come in and buy the stocks, because that's the only thing they haven't done so far. But interestingly, you can see the divergence between the Dow and the S&P. The Dow is trading below its 200-day moving average, whereas the S&P and Nasdaq aren't. So, you know, the Dow stocks, there's a lot more heavy stocks. The banks have really underperformed. Obviously, the airlines have underperformed. Boeing's a big part of the Dow. So, you know, obviously the airline industry in a complete mess for the last couple of months, and with the US still not showing signs of opening their borders, this traction on the airlines will continue. But as you can see, this item reversal is so rare, and it's a fantastic signal. So for the Dow to get bullish again, in my view, it needs to break back and close over 27,000. Again, we'll just go in and show you the Nasdaq, which closed at new highs last night. We didn't have an item reversal in the Nasdaq, and the Nasdaq is so stretched. We're trading at 10,130. We're well away from the 50-day, which is almost 1,000 points below. But yet the 200-day moving average is 1,600 points below. So it's just been an incredible move in the Nasdaq from a low of 6.7 on the 23rd of March all the way up to here. It's just been a phenomenal move. My blog is tradernoble.com. If you have any interest in taking a free trial on my service, I'm quite happy to upgrade you to my platinum service with all my updated emails. One thing about my service, if you actually follow it without emotion, that's the key in trading. You will actually make a lot of points. You got to trust the levels. For example, yesterday none of my calls got hit apart from my Nasdaq short. Until after the close, when my S&P and Dow sell levels got hit. And obviously thanking Mr. Navarro for his bearish comments, the market sold off aggressively and my take profit levels were filled.